Hi, Younger.
Hi, Colin.
How are you?
Great, great. How are you doing, Sean?
Good, Nyanga.
Hello,
Welcome
everybody.
back.
This is the start of our webinar on energy investments from the African Energy Chamber, hosted by Africa Oil and Power. Our topic today, driving African energy investment, perspectives on LNG, oil and gas operations, and private equity. So we have a great diverse group here covering trading in LNG, private equity, and independent oil and gas operations. In a second, I'll hand over to my co-moderator, Sean Duthie here. But just first, a few items to note. We do encourage you to get interactive and to join us. So if you want to chat, you can click on the chat box below, which Idina is looking after. So there you can interact. If you have any questions that you'd like to ask to our panelists and to get involved with the panel in that way, then click on the Q&A. I'll be moderating the Q&A and jumping in occasionally with your questions. So please put your questions there. If you are a member of the media, please raise your hand and contact Idina during the webinar. We have some time for you afterwards, around 10-15 minutes after the panel, so that you can ask your questions then. I know that we have at least a few members of the media who have questions here. So I believe that that covers all our housekeeping items, and so I'd like to get started now. If I can just quickly introduce Sean, and then over to you. Sean's the Managing Director of Inyani Intelligence, an Africa-focused corporate intelligence firm, previously a lecturer in political studies at the University of Cape Town. Sean, over to you to introduce your panelists.
Right, thanks very much, James. And as James said, what we're looking at today is, I guess, the drivers of what drove African energy investment, particularly LNG and private equity. Prior to well, this pandemic that we have, as we know, oil and gas, particularly LNG, was set to play quite a large role in developing a lot of African economies. We were seeing a large increase in foreign direct investment, a large increase in local investment, and a lot of that was actually coming from private equity. There was a real boom in Africa, as those who have attended previous Africa Oil and Power meetings would know. Of course, then came COVID-19. So what we're going to be looking at today is what is the status and what is the current perspective for oil and gas, for LNG, and for private equity, and what's the outlook for the future. I think before I introduce the guests, obviously it's a little bit of a different format. I know I've been on panels with some of these speakers before, and it's always nice you can kind of see the people. It's a bit different now, but we do encourage you to ask questions and to participate. I will ask a couple of questions, but I think it's always better to have a bit of a back and forth with people from the audience. So please do ask questions, and James will make sure that I'm signaled and they will be asked to the speakers. So for the panelists we have today, we're a very esteemed bunch. I'll start with Nyanga. Nyanga Fofang is the Managing Director of Bambili Group, a Pan-African focused private equity firm, and he's also a member of the AOP Advisory Board. Next, we have Kola Karim, who's the CEO and MD of Shoreline Energy International, a Nigerian company which has a diverse interest in energy, infrastructure, telecommunications, and also trading. And last but not least, Steve Brand is responsible for long-term LNG at energy and commodities company Vitol. And he's also served on Vitol's investment and origination teams with a focus on LNG and oil and gas. Welcome, gentlemen. Welcome to the panel. Thank you very much for being here.
Thank you.
Let's kick right into it. I think Nyanga, I'll go to you first, but obviously we're gonna chat about this for a bit because this is kind of the main thing. in your estimation, how has the private equity market been hit by COVID-19?
Well, if you want to aggregate this crisis with the dot-com bubble in 2000 and the financial crisis in 2008, it doesn't equate to this one at all. So it has really been a significant hit across the sector. I think right now in the PE space, what people are looking to do is to withstand the storm, basically to be around, for lack of a better word. So I think that most PE shops, I mean, their focus is not looking at any bargain, bargains out there. It's basically to sort of look at our companies that have in their portfolio, what are the liquidity positions, what's their revolving credit lines, what are the planned expenses, what are investments to be delayed, what sort of additional capital that is required to withstand the storm. So I think it's we're in for an interesting time. It's sort of the new normal or the new abnormal. But it is it's an unusual times, and I think right now most folks are just trying to withstand the storm.
Yeah, I think so. And Steve, what about for LNG, the market with LNG? Has that also been taking a massive hit?
I think the world was already expecting to have an oversupply of LNG this year, as we did in 2019. And COVID-19 has really just exacerbated that oversupply. On the demand side, we have seen a reduction in LNG demand worldwide, less so than we have had for crude oil and petroleum products. LNG's and gas has sustained a bit better, but there have been drops in demand worldwide. At the same time, the production has actually been higher than expected, largely because planned maintenance programs have been delayed because of the virus. So the supply-demand expectation has been exacerbated by COVID-19. We're already seeing some of the demand return in the East, which is a very positive thing. We have not seen it return in Europe yet. So what you're seeing happen in Europe is a lot of the global oversupply is actually being dumped into European grids and into European storage, which is nearly full. And that is driving largely the global hit on prices, right? So we've had prices below $2 delivered in Asia and prices just above $1 delivered in Europe this year, which is unheard of.
And Kola, I mean, Shoreline operates in the upstream, midstream, downstream, and also the other energy sectors. How has COVID affected your operations and the operations in Nigeria?
On the demand side, it's been terrible. As you know, the global pandemic has exacerbated the position, and the lockdown is killed demand. Global demand, from estimation, has dropped by about 30%. So we've now got oversupply of crude in the market, and hence the ultra low prices like it's not been seen in about 35 years, which is a mega problem for lots of companies. We've seen the forced cutback from a lot of the major players, like what Saudi Arabia came up with again yesterday, which is hopefully helping some resurging in prices, but is not going to be in pre-COVID type numbers as we saw earlier this year. And the reason is till we get a lockdown and the new normal becomes normal again, where businesses are back up, industries are coming back up, and consumption goes back up. That on the demand side. On the supply side, the biggest problem that the companies like ourselves are facing is, in conjunction with the national oil company, is refocusing and doubling our efforts on the budget. The operating budget needs to come down to reflect the current realities that we all face, because this is not sustainable the way it is. I'll give you an example. Up until 3 weeks ago, we were supporting each barrel sold by as much as $12 to $15. That's how bad the situation is. It is improving, but the only way we could drive that efficiency is to make sure we're negotiating day on, non-stop with all contractors in making sure the new normal is now new reality, and we cut back on expenditure to try and mitigate further losses.
And Kola, on that, on the operating budget, I mean, how much more do you think it needs to come down, and how do you think those cuts can be made? Like, is it a feasible reality to have that happen, especially in Nigeria, as an example?
The reality is some cuts can happen because it's a forced thing, right? Because it's a new normal. So reality for a service contractor, as an example, will know I cannot keep a $100 million contract that I signed 2 years ago at $75 oil. Today is $25. So it's either he wants to keep the contract or he wants to renegotiate the position. That's one. There's some critical areas that you cannot negotiate on. And those are the key areas like royalty payments. That is fixed at 20% to the Nigerian government. That's got to be paid irrespective of price. So that's fixed cost. So G&A, as in salaries and stuff, it is very difficult because this is a very unionized industry to go in and start cutting back on salaries. So again, that's in the bag, fixed cost. So reality position is the service contractors, but the critical areas that's gone out of the window are the big projects. Those projects are being canned, capex away, and all we're doing is what we call run and maintain. Just run, maintain the position, and keep the status quo.
Okay. And Nyanga, you mentioned something, you kind of chatting about the way forward for PE. Are there opportunities coming out of COVID-19? I mean, there will be a lot of businesses that are going to fail, that are not going to do well. They won't have the capital, but they're good businesses, but they weren't prepared for this. What kind of opportunities might we see for the PE sector to kind of take advantage of?
Well, I think we want businesses that are sort of, we'll look for resilient assets. Basically, these are ones that have no or limited exposure to the COVID impact. So you look for businesses that are sort of optimize your structure with technology, because basically the winners in this sort of new normal will be software, business services. So you look at business that basically utilize this sort of components to optimize their operations.
Okay. I think we have, luckily we've got some nice questions from the audience. So James, I'm going to pass it over to you to ask the audience questions.
Yeah, we actually have a few questions coming in now. I think I might start with Steve, but then Nyanga and Kola, please do jump in. Someone's been asking which countries in Africa have the potential for LNG new developments this year. I think maybe we can take the angle on that. What do you foresee for new or upcoming producers like Mozambique and Senegal? So maybe Steve, you could jump in on that one, and we'll ask the next one in a second.
Well, I think we've all seen the announcements from the majors about delays to FIDs on projects that have not yet taken FID, and we've seen announcements on delays to projects that are already under construction. This is largely a short-term phenomenon. On the projects that are under construction, the delays are based on often how do you get crew who are often on a 28 days on, 28 days off type of rotation. How do you square that with 14 days of quarantine in various locations? So it's been a bit tricky just to get people on and off of platforms for operating assets, but also for projects. We have seen some attempts to declare FM on projects, sometimes valid, sometimes invalid. And then on the delays to FID, they were already going to be tricky this year because of the expected low pricing. And the FIDs are just getting pushed back a bit until there's a bit more certainty. So to my knowledge, there aren't any projects expected to come on stream this year, but there were some big decisions that people were hoping to make this year. The silver lining in that is that Nigeria LNG announced yesterday that they had signed their EPC contract for Train 7. And that's in the midst of this crisis. Part of the reason they're able to do so is that the project is fully supported by its shareholders. They're not in a situation where they need to go out and sell all of the volume to the market, the actual shareholders of Nigeria LNG can take their own equity volumes, and that will underwrite the project. And they're all very, very strong companies in their own right. So projects like that can still progress, provided they can actually get their counterparties to sign contracts during the crisis. So we see 6 to 12 months delay on everything. And then 2021, hopefully, a recovery in these projects.
Thank you very much. Kola, I'll address this one to you. Will the current low gas prices be a driver to switch to gas to power in Africa? Or do you expect coal and oil to still figure in development plans? That's from Colin Graham.
Thank you. Look, I think that is a very important question, actually, and this has always been the line of thought of what I put in the bucket of where the opportunities post-COVID will come from. And this is where the sovereign, like Nigeria, could redirect and change the Africa Master Plan. I'll give you an example. Look, with where we find ourselves today, Nigeria is more of a gas country than an oil producing country. Why? Nigeria alone sits on, discovered, over 210 million scoffs of gas. Sorry, 210 TCF of gas in Nigeria alone. So you can imagine talking about the fourth industrial revolution, utilizing gas to power in Africa, changing the dynamics by building. Just imagine trying to get out of this recession that is going to happen, that is going to come. Just imagine in Nigeria, start a grand master plan of building gas distribution pipelines, cross borders. So thinking of from Nigeria to Cameroon, going Central African Republic, creating gas hubs in the countries till you end and link up with Mozambique and going with Mozambique going south. Then from northern Nigeria, going through Niger, going north and crossing into Italy. Then from the west, continuation of the West African gas pipeline, going all the way through Morocco into Spain. Just imagine all the African nations that this will revolutionize the industrial capacity by provision of efficient, clean, or cleaner source of fuel to fuel that fourth industrial revolution. And there couldn't be a better time to do it than now, where contracting obligations are lacking, so you can negotiate and get better terms on ground in energizing a project of this nature. This, for me, is one of the major advantages that sovereign nations of Mozambique, Senegal, Nigeria should be getting together today in creating a Pan-African master plan. And this, going forward, will be a natural hedge for future oil collapses. If you look at what's happening, Russia's mainstay is the gas sales into Europe. That's always been a natural hedge for the cycles, troughs in oil and gas, or in the oil sector. So again, if African nations could create this will do two major things: create an amazing industrial power base for Africa, access to energy becomes available right across the continent, and a continent of the size with its natural resources could only be a better structure for the continent.
I think you're absolutely right, Kola. And I think that's what we would all love to see. I mean, and that would work perfectly as well with the now delayed but planned continental free trade area, the eco-currency in West Africa, and all of that. That would be another cog in the wheel of integration in Africa, which is absolutely needed and would be a great thing to see. But what have you seen? I mean, have you spoken with anyone in Nigeria? Do you think, I mean, what's the likelihood that you think that would actually happen? That we'd actually see the political will and that kind of industrialization and cooperation happen?
I think the reality is that the new normal is going to force a lot of government rethink on things like this. Look, at the end of the day, when you're producing offshore oil between $25, $30 a barrel, and you're selling at $25, reality, something's got to give. And this is where the opportunity is going to come for sovereign nations, sovereign states, to start thinking out of the box in seeing how do we continue to mitigate these losses by also energizing a market that's ready and available, and that's the gas market on the continent.
Absolutely. Let's kind of stick with government. Maybe a bit, you can answer if you like, but Nyanga, let's start with you. So we're both in South Africa. We have a pretty hard lockdown here. And we were chatting before. Steve was saying about how the delays are short term. A lot of it is due to the imposed quarantine that you have to do. A lot of the losses have been due to the lockdowns that we've had. Do you think that has the government's response to COVID-19 been too harsh, or I mean, will it drastically affect the long-term future of oil and gas, or do you think that the response has been, I guess, needed? I mean, Nyanga, let's start with you, since I think in South Africa we've got a very hard lockdown that's continuing for quite a while.
Indeed, I completely agree. It's I call it a high-class jail session we're going through, without any sense of a parole yet. Clearly, I think it is clear that this pandemic and its implication and impact it's still far-reaching, and nobody quite know the extent. To the degree of the quality of the lockdown measures, I'm not quite sure whether on how the government is approaching that and what are sort of rationale. The view is that they're taking scientific input into consideration, but no doubt it's postponing a lot of issues in terms of an exactitude about the number of infected folks, and also about the impact of the economy. We're not sure yet how that is going to look like. All we know is that it's not going to be a normal economy when we open. I think when we reopen to the new normal, I think it will be pretty much impacted by a lot of the other bigger economies. I mean, China went through its own lockdown, and like somebody who's been, prevented from having food, I think when they start consuming, it's going to have a big impact in terms of the quality of consumption of the energy space, and we'll see the impact of that in pricing also. So I think it probably would cascade down to every other lockdown opportunities or cases like South Africa. But the degree of rationale behind that and the extent of the lockdown, I'm not sure.
Yeah. Well, I mean, I think we've all kind of mentioned the new normal, that when this is all said and done, whenever that will be, it won't be back to business as normal. Steve, what role do you see LNG playing, trying to help countries recover from the economic ramifications of COVID-19? What role will LNG play in Africa post-COVID?
I guess we're talking about two different aspects. One is producing country, and one is potential demand country, really. In terms of the producing countries, for a while, they're not going to see a great amount of revenue coming back from LNG, certainly not for the rest of this year, because prices in Europe and also prices in the Far East are going to remain pretty suppressed for a while. The ability to generate higher pricing and higher revenues is largely going to depend on consuming the planned oversupply, which we expect it to be gobbled up sometime next year anyway. But then it'll come down to what shape of recovery do we all have? When are we back on the same trajectory we were on before? So instead of the market tightening sometime in 2021, as was the expectation, perhaps the tightening doesn't occur until late winter 21 or sometime in 2022. And so we see the producing countries starting to benefit probably a bit later than they had hoped to. On the demand side, it comes down to whether or not countries can and choose to use LNG or domestic gas instead of other alternatives for producing electricity and for fueling industry. The prices look very, very attractive right now on a competitive basis. We have seen coal to gas switching in Europe, where it's easiest to do. We've seen some coal to gas switching in Asia, where there is flexible capacity to do so. In Africa, there's a handful of countries that have very, very large industrial bases and very, very large power generation bases who could benefit from low-priced LNG, both environmentally and price-wise. But then most of Africa has very, very small power demand and very, very small industrial demand. And the big nut that no one has been able to crack yet is how do you set up either a hub and spoke type LNG receiving infrastructure to service multiple markets, or how do you justify one large LNG project and then use that project to feed other countries in a small way once the big investment has been made. The biggest challenge around that is financing. When you look at the private sector in Africa, and we've looked at this in certain African countries, especially in West Africa, if you're trying to sell LNG by truck or regasified LNG in small quantities by pipeline to industrial customers, very bankable customers, most of them don't want to sign a contract that goes on for more than 12 months. So there's no way to raise debt against an import project against a 12-month commitment. You need a multi-year commitment. And on the power side, which your counterparty tends to be the government, governments in lots of Africa think of LNG initially like they think of oil, like HFO or diesel or coal, which is that it's quite inexpensive to import it. And that's not entirely true with LNG. You do need to make a long-term commitment to the infrastructure. So I think the demand side is going to remain as choppy as it was before until we see one hub show up, hopefully in West Africa, but it could also take place in East Africa, maybe in Mozambique. And that hub is underwritten by a project, and then you can lighter off of that hub and deliver into small countries. On the producer side, it's going to be all about global recovery and how quickly the global recovery comes.
Okay, and Colin, I know you're interested in this as well. I mean, do you agree that, I mean, it would be nice if maybe the low prices might see this as a driver for more African countries to push into LNG. Do you see that happening? Will COVID-19 help that push, or is it still a long way off?
It's still a long way off because of the financial commitments. And as Steve said, most of the financially viable industrial users do not want a long-term commitment. Why? Because the question mark around what the future holds for the availability of cheap and efficient power source for their industries. That's one. But I'll tell you something. I always see an opportunity in every misadventure. And this, for me, for the continent of Africa, is one of those. And it could work in tandem with what Steve's solution of having some facilities across the continent. But think about this. If Russia could feed the European Union with domestic gas, why could nations in Africa that have found phenomenal amount of gas not look at a two-pronged structure, developing LNG and also developing a local solution? This would always be a buffer to a cyclical market that you can't control. I'll give you an example. In Nigeria, the price of LNG today, as Steve just said, is at the pits of hell. But local consumption today is still $2.50 to the local power producers. So think about it. You don't have to ship it, but the local power producers are paying $2.50 locally in Nigeria. And most of Africa will do the same. What is the major deficit on the continent? Electricity. What is a cheaper source of fuel that today we could equate to be available on the continent of Africa, be it way west in Senegal, Mauritania, mid Nigeria, Equatorial Guinea, go down Mozambique, and Tanzania. So if you think about the application that can be put to play, both LNG and domestic gas has got to work in tandem, but African states are sovereign nations must see this as the African Union commitment that we want to make a difference, and that is the only way the continent of Africa could ever be part of that fourth industrial revolution.
Absolutely, absolutely. I'm going to throw it over to James now, and I think you have a question for Nyonga.
Yeah, I do. Nyonga, this is a bit more South Africa focused, but also with a sort of renewables angle. You know, what's the outlook that you see for renewables taking over from natural gas, renewables, and any kind of, you know, clean energy solutions? If you don't mind, that's part one of the question. Somebody else is asking in the South African context about the future of FDI into energy projects in South Africa, given the recent downgrading and regulatory provisions for alternative energy that exist here. And finally, any outlook on the South African government's gas to power IPP?
Thanks. I think before I get into that, I want to just make a comment, and it's directly related to these questions regarding what Steve and Kola raised about gas and availability. I think a lot of it would have to do with, you know, I do agree, I mean, there's a funding element to it, but the funding element is directly related to the sort of creative, or the absence of creative regulatory regimes. In the absence of that, it's very difficult to get the sort of appropriate funding to complement that. I think it is pretty clear that I mean, we have that deficiency across the continent in terms of you know, energy supply, but it's not an absence of funding opportunity. The question is really, how do you bridge that gap? It has a lot to do with the regulatory regime. And if we don't have a creative regulatory regime in place, it's very difficult to try to kind of quality funding that will complement some of this opportunity. In the South African space, I think what has been happening now, given our challenges with ESCOM, has led government to get a bit more creative in the regulatory space, where right now you can self-generate power all the way up to 1 megawatt without requiring any license for it. And with that, you can get all sorts of investor group who are interested in complementing power at that sector to put funding behind any group that has some kind an adequate or a proper investor opportunity. So I think there is a correlation with the opportunity, the regulatory regime, and the opportunity. And I think in South Africa, because of the challenges we've been facing with ESCOM, and I think it's a good case where you don't want to waste the crisis, right? And I think it has forced us or the government to basically be more creative, because, you know, we're probably living in a dire strait in terms of power supply. Regarding renewable, it's not necessarily going to replace the existing power options that are available, but it's going to increasingly getting adopted. I think it's a question of the initial cost of entry, which is highly expensive, but in terms of on a longer term, sort of total cost of ownership is much more cheaper, of course. So I think it will be adopted over time. It's here. In fact, within this present regime, I think the sector that is sort of resilient is renewable, because it's sort of cheap. Cost of operation is very cheap right now. And it just makes it easy to look at it as an investor case, as an opportunity.
Okay, can I just step in to say something? Yeah. Look, I think that is why I said sovereign on the continent of Africa has got to take and bear responsibility. Regulatory is within the gambit of sovereign.
Correct.
Also securing adequate financing on a sovereign level. You see, Africa's mismatch has always come on this misfortune that we're waiting for third-party investors to come onto our continent. I'll give you a typical example of what baffles me, having been to Mozambique. In all the talk of fines in Mozambique, you have South Africa next door, short of power. You have Zimbabwe, you have all the countries in the region short of power. But all we hear is 15 billion FID awaiting on LNG, 5 billion on LNG. Now, something's not making sense. It's either strategic decisions are not being taken, proper advice on the sovereign level, in understanding you have a market right at your doorstep. There is an existing pipeline from South Africa, from Mozambique into South Africa. The Sasol's running. I have not heard anywhere where thinking as part of this big energy hub in Mozambique to build even bigger pipelines to send the gas produced or part of into South Africa, into Mozambique, into all these neighboring countries. Now, this makes no sense. So my take is sovereign participation has got to think holistically that how do we want to connect the dots? First, yes, we need foreign exchange and we need international investors who have the know-how to put up match and braces of this structure together. But more importantly, to energize our community and our neighbors because it benefits all and it still makes sense financially. And this is what it is. I do not think if today South Africa gets double the gas it's getting today, they will consume it all. But all I keep hearing is, I think we're very confused in Africa. All I keep hearing is, oh, we're talking of renewables, we're talking of wind. Yes, those are great, but those are even more expensive entry projects to go into. So why aren't we thinking holistically, thinking of how we utilize and beautify our natural resources? Because without the energy, you cannot achieve it. So for me, it's key critical to look at these dimensions and say, listen, sovereign, are we taking the right advice? Are we doing the right thing? And more importantly, are we thinking of our immediate markets next to us, not only relying on the cyclical markets like the LNG, like the oil market, because those prices we do not control.
Kola, on that, I mean, you mentioned about the sovereign taking a lot more of a stake and a lot more of a role in this. Do you think that the idea of the kind of the, let's call it an LNG revolution in Africa, should it be pushed by the private sector or the public sector?
It's got to be a bit of both. Look, the private sector always works with the laws of economics from day one. Ab initio, it's got to make sense. If not, you will not attract adequate capital to fund it. But from the sovereign level, decisions are made. I always equate this to, why is a country that has a national army, but they're not going to war, and they might not go to war for the next 50 years, why do they have 10, 15% of their budget buying weapons? So we have to think out of the box the same way. They need to invest in structures like this that makes them energy sufficient to ensure future generation of these countries and the economies become sustainable.
Well, I see you're getting a lot of support on the chat for your comments, Colin. I think we all agree. And myself, who studied kind of regional integration, African integration for quite a while, the issue has always been, and it has been a lack of political will. Yeah. It has been the fact that the sovereigns have said they're going to do it, and they said they want to do it, and they have the plans, and then they never do.
If I can come in, I think there's a disconnect with the sovereign and the private sector.
That's it.
In terms of this, and I think they're not talking to each other.
Yeah, you see, look, just again, let's go back to South Africa. South Africa's power problems has been known from as far back as 2003, if I can remember correctly. It's insane. How long did it take them to build the pipeline from Mozambique? But no one's talking. Each time they keep talking about, let's build nuclear, let's build this. It's insane. Why do we keep chasing our tails instead of getting results? Let me tell you what's missing, as Younger said. Private sector and public sector needs to work hand in hand. Go back. Most of these countries that's found oil and natural gas have national oil companies. But you find more often than not, you've got civil servants on the national oil company front and who do not understand business and how private sector operates. So you've got two people trying to achieve semblance of something, but end up achieving nothing. That is the main problem. So people like yourselves, people like this organization, the key advice is let's start making governments, especially of the countries with this natural gas, with this natural resources, understand. Let's think local first, whilst we're trying to do global. Because then you can interfit both of them to make it work.
Right.
Kola,
Right.
I guess the question is, when are you running for office?
No, thanks.
Well, let me ask a question. I mean, we're talking about renewables, and LNG might be far off, and you know, like you said, Kola, a lot of people have said, well, renewables. This is the future. Considering COVID-19, we don't know how long this is actually going to go on for. But what projects do you think in the next year, 2, 3 years, what projects are investors going to be most attracted to? Then, Kola, do you want to go first on that?
Like, if you look at reality, not focusing on the energy sector, one thing is clear. Pharmaceuticals and food is part of the reality of where we are today as the new normal. So most investors I have spoken to, when you call someone up and say, listen, Africa has an amazing opportunity, oil and gas, prices are all-time low, you could buy companies and assets cheap. What you get back is, listen, the new normal post-COVID, I'm looking at food, tech. Someone said to me yesterday, warehousing, and I'm trying to connect the dots, right? So the key is this. My view is the energy sector in Africa, using the solid base of our natural resources that we're sitting on right across the continent, could become an amazing opportunity for Africa and Africans to change the narrative and the dial in making a difference to the energy space completely. But sovereign needs to take the lead because it's easier. I'll give you a typical example. Nigeria as a sovereign state could easily go to the multilateral agency, to the IMF 2 weeks ago, and they got $3.4 billion like that. That's what sovereign can do. They could mobilize capital at a much larger space to getting transactions done, but being part of it. Not leaving it to private sector, because the private sector drive and focus, it's only to earn a profit. No investor with his investable capital will come to Africa because I love the continent. It's because the returns are good and we're making a profit. If not, I would rather sit in cushy London or New York or in Tokyo, invest my capital and make that same return. That's reality. So we should never kid ourselves. That's my contribution.
And Nyoga, do you agree? I mean, where do you see this?
I beg to differ with Kola. I like the continent.
Sorry?
I like the continent.
Okay, let's do a deal for below 10% IRR.
So the issue really is about quality.
Mm-hmm.
Clearly, investors who are looking, there's a move towards quality investment opportunity. You'd want to look at cases where there's resiliency in terms of the kind of exposure and business that you're looking at. I do agree with you. People look at businesses that are resilient to the current pandemic impact, technology, business service, software, and of course, there is a temporary shift away from transportation. Aviation is suffering a lot and will suffer quite. But I don't think we'll go back to the olden days of using the sailboat. We'll still fly. It's just going to be a question of the costs. So I think business will have to reinvent itself to survive in the next new norm. And I think also business in Africa has to be perceived in the same fashion. And I think investors looking at Africa would also want to wear the same sort of outfit as you look at opportunities. What's the quality assets that are out there? What are the management team? What are the sort of structures you're using, be it technology or software, to optimize the operation to make it an efficient, sustainable system or business opportunity? So I think that some things will not change in terms of how investors look at opportunities. You're looking at bottom line at the end of the day.
Yeah.
And And of course, you pay particular attention to the regulatory environment. Is it easier for me to do business in X or in Y? Which comes down to, again, to what are the sovereigns doing to encourage qualitative investment to complement some of the opportunities.
Ola, do you want to?
Yeah,
reply?
I was just going to say this. Look, if you look at Steve, they've got an amazing business and understands the space. They're private sector, private capital, but their capital has to have a certain return hurdle. But that still has a place on the continent. Because if you think about Africa with receiving terminals, about 5 receiving terminals, still feeding the local domestic gas market, feeding the power sector. This could be an integrated process, but you need people at the bottom and the top of the chain to make sure that fusion works with the right regulatory structure to make sure private sector, side by side with public sector, could work and everyone hecks out a living.
Right. Well, we've chatted a bit about the financing of these projects as well, and how we're going to finance them, and the issues that we have in Africa with financing these big projects, and usually having to go abroad. If you had, I mean, maybe there are some of the participants here who are maybe small independent African oil companies, gas companies, service companies. Where would you recommend them look for investments going forward in the the post-COVID new normal? Should they look at maybe bonds and PE, DFIs? Nyonga, should we start with you? Where should people look for money in the new normal?
People look for money. I think you want to look for patient capital. Basically sovereign wealth funds, family offices, and some of the pension funds that are looking for long-term sustainable returns. That's a sort of investor backing that you want to look for. Not the sort of short-term with sort of trading output in terms of their their style. So if you're looking for investor sponsorship, I think you want to look for an investor that has patience capital as part of his mandate, in terms of we're sitting here, we're looking for stability and of course long-term growth.
And Kola, what do you think? And then we'll go to Steve. Where should people look? I mean, and I guess in a way also, what advice would you give to maybe a small, medium-sized enterprise who's looking to grow in the new normal post-COVID Africa?
Look, one big position Africa always finds itself that we've realized over the last couple of years is there's a lot of do-good capital, is what I call it. There's a lot of do-good capital that's sitting out there wanting to be seen in the new world we live in, wanting to be seen that I'm doing some CSR, some good on the continent, right? I remember 2 years ago, I was talking to a big fund manager, and we were talking about Africa, why are sovereign debts on the continent not being subscribed? This is corporate sovereign debts not being subscribed and the pricing, and he said to me, look, Kola, writing a ticket of $50 million is nothing to my portfolio of 100 billion. But at least when I'm pitching for money, I could tick that box that I'm investing in emerging markets, I'm investing in Africa. That's the way he sees it. So there's a lot of, I don't call it dumb money, but there's a lot of do-good money out there as well from family offices who have seen this, let's chip in $2 million, $5 million there. But the reality is most of these projects got to be prepared to be above standard. So it's presented properly and investors or potential investors can understand what it is and what you're offering. More importantly, you find though, that the investors, the capital also follows the people presenting them, then the transaction itself. So it's key critical, you prepare from both ends. The business got to be sound and make sense, but the promoters, more importantly, have got to have impeccable positioning to support themselves.
Okay. We're about 10 minutes left in the webinar. I'm going to throw it over to James, who has a couple of questions just to finish up. Over to you, James.
Yeah, so I do have a couple of questions here from the audience, and thank you very much for all the submissions, everyone. I'd just like to remind, just before this, remind the media, if you have any questions for after the webinar, please do raise a hand and submit them now. So first, you, Nyonga, how do you foresee exits in private equity in the next 12 months in South Africa, or indeed around Africa, with the persistence of COVID-19?
I think exits will inevitably drop in the short term. I think the holding period for some of the assets will have to extend. It won't just make sense to look at exit options at this rate. So I think that a lot of outfits would want to sort of renegotiate exit options for sort of longer tenure. It just doesn't make sense to exit at this level. So I think that the majority will, of course, we want to hold up a little bit to some quality of maturity before the exit. Except if there is sort of redemption pressure, liquidity pressure from the sponsor groups or whatever.
All right, thank you. And I've got a question for you, Carla. This one's coming from Derek Campbell. He wants to, he's asking about the upcoming round of marginal field opportunities in Nigeria. I was actually wondering myself how the marginal field players would be impacted here. He wants to know if this is, in your view, a committed effort from NNPC to let new players into the market. He wants to understand if this is a real play, as he says, or a way to get signing bonus money and then over-legislate the opportunity out of existence, in Derek's words.
But my evaluation is this: it's a real play because it's been on the cards for quite a while. But even more so now with the global downturn, I don't think necessarily it's a good time because, one, how much capital is out there following oil and gas today if you're a risk manager looking at where oil and gas is. So it is a real play. Government is going to get it done. We've seen a lot of movements in the market in the last 2 weeks and a lot of talk and announcements, but when it's actually going to happen is up in the air.
Okay, thank you. And actually, we have a question for you, Sean. From the lens of corporate intelligence, how do you see the risk environment changing during and post-COVID in the energy investment landscape on the continent?
Yeah, good question. I mean, I think now what we've seen, looking at it first politically, we're definitely seeing a lot of countries taking advantage of COVID-19 and being able to put in states of emergency, states of crisis, cancel, delay elections. So we are seeing a backtracking of democratization in the continent. And one of the concerns is obviously that when we go to a new normal, how long will it take for some of these governments to actually go to that new normal where they take down the state of emergency? Because COVID-19 is not really going to go anywhere. So the question is, if that's not going to go anywhere, are we going to still kind of see a creeping authoritarian government coming into some of these countries? That's written a couple of articles, and that's kind of been on our mind. I mean, operationally as well, the operational risk is going to increase as all economies are going to take a hit. And as the economies take a hit, we're going to expect a lot more social strife. I mean, in South Africa especially, where, I mean, we love to protest, there will be a large, I guess, a growing cleavage, would be growing inequality, and without any kind of a strong leadership. And I mean, like Kola was saying, to actually use this crisis as an advantage to change things, quite frankly, and change the nature of the economy, that's going to get worse. As far as kind of corporate intelligence, corruption, things like that, I don't know whether if someone's looking to go into the oil and gas sector, the energy sector after this, whether there will be increased risk of bribery, of corruption, I think that's always going to be there. I don't see it increasing because of COVID-19. I don't see a reason why more people might want to find ways in, with underhanded means or breaking the law. So I don't see that to be a major issue. But I think there's definitely going to be a lot more political security operational risk because of COVID-19.
Great, thanks very much, Sean. We are going to go over to media questions in a moment, but to wrap up, I think we can go back to our panelists and just ask for any final comments here. And Stephen, if we could start with you.
No, it's been a vibrant discussion, and thank you to the panelists and the rest of the audience for throwing up so many challenging questions. I think my parting comments would be, none of us knows exactly when is the end of COVID-19 in terms of material impact. I think we're all hoping that we just had this one major wave, and even if there's a resurgence, it's not so bad, and then our economies can get back on our feet. But we don't know for sure. So it feels like it's going to be a bit of a whipsaw 2020. And until we get either a vaccine or a treatment or some answers, we're not really sure where the market is headed. So in the meantime, I think the key is to just keep plugging away at the projects we have, at the trade relationships we have, being very, very cautious about credit, being very cautious about new trading relationships, but kind of keep the world ticking over, as it were, until we have a little bit more visibility. And then longer term, we will get back to some form of normal, and we will see investment in the continent, I think, expand quite dramatically.
Thank you very much. Nyonga, do you have any wrap-up comments?
Right. I think it is an opportunity not to waste the crisis. We would have to reimagine our businesses going forward, and we would have to start, I think, maybe sort of segue into lots of scenario planning about how we reposition the business, optimize the structures, and also, stress testing, whether it's going to be a U-shape or a V-shape recovery, with all the projects and projections for liquidity and capital needs. And I think that, as Steve said, it's very difficult to have a clear sight in terms of what the end game would look like. But I think in lieu of that, I think one would just have to keep, coming up a couple of scenario planning and stress testing about the business model, and also instituting a sort of liquidity discipline on every sort of portfolio investment, and always doing what I'd call a typical bottom-up review of business, and while anticipating that there will be some kind of a treatment.
Thank you. And Kola.
One thing is clear, post-pandemic, Africa will face a very trying time. The OECD countries are struggling, so you can imagine the level where Africa will find itself. But this opportunity is a test in seeing African leadership at play, in trying to make a difference, utilizing that source base of our natural resources and the very youthful population on the continent, and reversing that into an advantage for the continent. And I say that holistically. You have over 1 billion people on the continent, where you have 60% just under the age of 30. Reality is there's huge buying power if the creatives come to play by energizing that fourth industrial revolution, that could only make a difference between the social, political undercurrents of various economies on the continent. But that possibility would only happen if you have a clean, safe, cheap enough type of energy that would help energize to making that a reality. Post-pandemic, the world is going to be a different place. And reality is Africa could be in the fore of that, because we've shown before we can leapfrog technology. We could also show to the world we can leapfrog this, but sovereign. I keep going back to sovereign. They today are the only ones with the borrowing capacity, but that borrowing capacity can be utilized properly in energizing that youthful population and making a difference for generations to come.
Fantastic, thank you so much. Right now, we'd like to hand over to our friends in the media. I understand that Robert Perkins from Platts has a question or two for the panel. So Robert, you're welcome. Do we have Robert Perkins?
No.
It doesn't look like it. All right, well, no problem then.
I think he is on, but he's on mute.
Yeah.
He does.
Hello, can you hear me?
There you go.
Hello, can you guys hear me?
Yes.
Yeah.
Oh, great. Thank you. Thank you. Hello, everyone. Thank you for taking the time for this call and taking my questions. I had a couple really for Stephen, actually. I think first of all, I guess I was thinking around the commentary in terms of the risk to long-term energy demands, coupled with the increasing imperatives of the decarbonisation push that the sector is grappling with. I just wondered, do you see that tempering at all Vitol's appetite for growing its oil-focused operations in Africa? So I'm thinking here, is Vitol still very interested in expanding its producing assets, refining and storage and trading capabilities on the continent, or do you see more of a focus now going forward towards perhaps power and gas? And then secondly, on the LNG, I take on board your comments in terms of the potential delays to FIDs broadly on the continent. I just wonder, does that comment refer also to your specific deal with Equatorial Guinea's Punta Europa gas mega hub? Do you see that basically on ice now for a year or so, at least? Thank you.
No, thanks, Robert, for the question. On Equatorial Guinea, I don't think there's any new news related to that particular partnership or that particular project. So I think we're plugging away as if there's not a whole lot of change, because we haven't seen any change on that project. With regards to Vitol investment in Africa as a whole, and in certain geographies in Africa, it continues to be a key focus for Vitol across all of our businesses. Billion-plus population growing rapidly, big emerging economies, lots of trade within Africa itself, which is very, very positive. To Cola's earlier point, investing in the right places with the right partners can generate reasonable returns. We don't need crazy exceptional returns. They just need to match the risk profile of the investment. So Africa will continue to be a focus area for us to do further infrastructure investments, upstream, midstream, trading, and in downstream. As you know, we're in over 20 countries on the retail side. So we will continue to look for the right opportunities to expand that portfolio. More broadly, we do see a shift over the next 15, 20 years towards cleaner energy across the boards. Yes, that does include renewables, and we've made investments already in Ukraine, North America, and other places in renewable power generation, both wind and solar. We're looking to do the same in Africa. And as a bridging fuel, we're very big believers in natural gas, whether it's by pipeline or as LNG or as CNG. So yes, we do continue to see that being an opportunity in Africa for quite a few years.
Thanks very much, Stephen, and thanks very much, Robert. This actually brings us to the end of the webinar, and I'd really like to thank everyone for joining us. Robert, you didn't have another follow-up question, did you?
Oh, thanks, James. Well, really, I mean, if I'm the only one here, then I'll take the opportunity.
Go for it.
Just really the comments on renewables, any specific technologies and geographies then in Africa that Vito will be interested in. I mean, obviously solar, I'm guessing would be up there. Any color to that renewables push?
The only color I'd add, I mean, there's no geographic limitations. The only color I would add is that there's a huge amount of competition for investment in renewables in Africa and worldwide. There's a lot of development funds, a lot of private equity funds that are renewables focused, a lot of IOCs with renewables budgets, a lot of EPCs, including in China and manufacturers in China with budgets to invest in projects. So there's actually quite a crowded place to try to invest in renewables. And where renewables have been successful off the back of good government regulation and good government templates, the returns have gone well below 10% headline returns. So short answer, there's no specific market. Longer answer, it's a crowded marketplace right now.
Okay, and for a company of Vito's size, what would be sort of a target return rate for a renewables project?
It really depends on the market and the security of the cash flows. So can't really answer that.
Okay, thank you.
Great, thank you, Steve. I'd just like to take this time to thank our panelists, Kola, Nyonga, and Steve, for taking your time to come and answer the questions. And also thank you to everyone listening and writing the questions. I will throw over to James now to tell you about the next webinar. And thank you very much.
Thanks very much. Thanks to our panelists.
Thank you very much.
And thank you very much, Sean from Inyani Intelligence, for your moderation. We look forward to seeing you all again soon. To everybody who joined us, we really appreciate the input on the questions and answers and all of the chat and the interaction there. I'm sorry that we couldn't get to all of the questions. I'd just like to close by reminding everybody that in 20 or so minutes we have our webinar featuring the Minister of Mines and Energy for Namibia. And then on Monday, we have our Angola webinar. So you can sign up for those at aopwebinars.com. Thanks very much, everybody, and see you soon.
Thank you.
Thank you.
Thanks, everyone.